The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. Dow's down 64 at 20,816. S&P's down 11 at 2361. The comp index is down 33 at 5,842. The VIX is up 90 cents at 1225, getting closer to the 13s. We also have the trend higher, but that's no big deal. The E-mini is down 13. See what we've got here? We've got Chapman Wave 5, peak D, top at around number 2,401. When you add up all these different components, you have to say to yourself, and one of the reasons we are now short the Dow is you look at this and you say, to make a new high, you're going to have a whole new set of parameters. I'm not sure you could have a bounce tomorrow, but I'm not sure there's any new high coming very soon. So in the meantime, back at the ranch, you've got this H pattern. Remember what the H pattern is? It just looks like a lowercase h. The left side low is key. If it breaks that low, this will be the E-mini. It's a 2354 round number. If it breaks that on the downside, closes below it, that's a negative. Hey, leg D. Gone to a peak D in the weekly chart. Chapman Wave 5 here as well. But there's only a 5. It doesn't mean to say that it has to tank because the MACD is still good. But the stochastic's gone from the 98s down to the 91% area. Very strong, but coming down. 120 minutes shows you the arch. This is the H contract. I could do the same thing with the M. Let's just do the M just so that some of you I know already moved to the M. I usually wait until the last minute. When I get a reminder, 2358 down 1350, same thing. So the low that would be needed to be taken out is 2351. Round number low, so it's a 3-point difference there. And 5 in the weekly chart. And there you got the arch formation. So let's go to the nitty-gritties here because we want to look at the QQQ series. Had just 23 cents or something to go yesterday to break to a new high. 131.68 was the March 1st high. 131.64. Oh, what am I talking about? 5 cents. That's all I needed was 5 cents to break to a new high. I think this has double top potential. Look at the MACD, so weak. And the stochastic, very weak. It's at 80%, but way weaker than it was back in March. Actually, way back in February. So this is a negative. We haven't yet we've made a peak D in the weekly chart, but there until the weekly chart takes at 129.20 to 128.70, somewhere around that area. I think that we have to have a little bit of patience and say there's still inner strength, but it's beginning to weaken. Technically, price should follow very soon. Let's go to the IWM. It's been one of the weaker indices. It's weak again today, down 1 at 135.16. It's broken key support levels. The next level of support will be 133.89, the low of the 8th of February. This is unusual. It's a peak C. I could give it an alternate count, G/C. I'm calling it a C for now in the weekly chart. Still leg C. The monthly charts are all very, very positive still that I'm looking at. Quickly, the NYA. I want to say quickly because it just no one actually trades the New York Stock Exchange. Made a peak F back on the 1st. Pulled back ever since. Peak D in the weekly chart. Still leg C in the monthly, and that's still a very good sign. Okay, let's get to the nitty-gritties of gold. Gold is up 1 at 1204.4. One of the reasons why I want you to get a gold stock is I want you to start a position. I don't think it's quite ready yet, but I wanted it as a feeder. I was going to get it just fully load up, and then I thought, you know what? I don't have that evidence. After all, when the Fed comes out with its numbers tomorrow, if it looks like yields aren't going to go up as sharply as everyone anticipated, there's a good chance that the Fed is going to be talking about a rate increase and then wait quite a while for other bits of information to add to the next one. My thinking is they're still going to kind of lean towards that. They don't want this market really to tank. They just want to set the stage to say, those were our parameters. We showed you, we gave you for 6 years, we've given you parameters. We've met all those parameters. We have no choice but to go higher. But until such and such and such happens, we won't go to the 0.5% or whatever it is. There'll be a little bit of relief in the market, but the market has to come to grips with an overbought condition. That's all that it is. Okay, so gold is saying, maybe I'm not quite ready. Maybe I just need to do a little testing between 1190 and 1180, and that will be kind of where we might be able to get something of greater intensity in terms of a bounce. But it's really and let me do silver because I know a lot of people like to look at them together. Silver is okay. It's up to 0.01 at 16.98. I think it's not going to hold the support at 16.855 from 3 days ago. That's my thinking right now. And that's the big test right there. The 27th of January, 16.70. That's really what it has to hold. So let's go to quickly. No, we won't go quickly. We're just going to go slowly along. DXY, the dollar. Dollars in that containment area I've been talking about. Theoretically, I should put a down arrow. I want to wait until the end of the day to do that. The weekly chart has this combination of two fighting patterns. One is the cup formation, and the other is the arch formation. Now let me get rid of this, and let me get rid of that. And now let me show you what we're looking at. We're looking at the arch. If there's a break in the dollar below 100.50 in the next day or two, that'll be a point down. That'll be tomorrow afternoon. We'll get a test. And if it pops up above 102.26, and there's a lot of evidence to suggest that you have to be watching these parameters very closely, because a pop into the 102 60s is suggesting very strongly that there's going to be a retest of the high that was made at 103.82 the week of January the 1st. And all I can say is that a break into the low 100 area is going to suggest that we're going to make the arch pattern. The big test will be that low of 99.23. That's all I can say right now. The monthly chart is holding very well, and that's really important. 99.59 is the 9-period exponential moving average support there. So dollar and gold are right on the cusp of either changing their trend or continue their trend. And I think the next, by this time on Thursday, we'll have a really good sense of what's working, what's not working. So now let me do this. Let me go to high-grade copper. High-grade copper was quite weak for quite a while, since early February, and went from the 284 area down to the 256 area, and now it's at 2.63, and it's having a bit of a bounce. Now, what's really important about this is that copper is just stuck in this range. However, the monthly chart is still improving, and I'm looking at it and I'm saying copper on a break to the downside underneath 2.55 would really be suggesting that there's some kind of relaxing in the economies of the world. That's relaxing meaning a slowdown. That's kind of what I'm thinking here. Hey, let's do this for a moment. Let's just tap here, and that's the German index. And the German index has made a peak D, holding quite well. This is the Dow Jones. This is the Dow Jones German stock index. So it doesn't correspond exactly to the DAX, but it's very close, I think. In the meantime, it's holding quite well. So I wanted to show that just to say that many other markets are right on the cusp in the same situation. We will talk about the TLT, which is trying to rally today at 170.30 when we get back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So let's just go through this. What we're looking at here is that the XLI, the S&P Spider, Industrial Spider ETF, and of course it has many of the other components in it. It's not just what the Dow has, the industrials, has made a peak. G in the daily, I spoke about this recently. I'm calling this a C in the weekly chart. There's nothing I can do about this. It's the way it is. It's a C. And a C in the weekly. So far, those are positives. However, if I look at, and I had some really great questions, I'm going to go to the questions in a moment. I'm going to say, so the XLI is pulling back, making lower lows and lower highs. That to me is good enough to say they were in a consolidation phase, and that confirms it. I call it a consolidation phase. I sell signal. I haven't got a sell mode at all in the indices. However, what's really important about this is that we constantly see buying, and I think until the Fed makes its Fed speak tomorrow, there's a real good chance that the market will constantly keep coming back to just slightly down, maybe a mixed market, a kind of a wait-and-see attitude. And what happens, not so much tomorrow, it's what's said at 2:30, and then it's the reaction. I don't care what they say. It's the reaction of the market to the statement. That's really the issue, and that means Thursdays where we really see whether there's a trend. Now, I don't call it a trend change because the trends have already gone in almost all the indices, and we'll go through that in a moment, to the downside on the short term. But now let's look at this. You've got an arch formation in the TLT weekly chart, and that says that the low, I should type that in, that's the low of the week of the 16th of December at 116.80. Let me just type that, 116.80, and we've got 12, I don't even remember what I said, 16th, 16, what did I say that was the week of? Yep, the 16th. So that's 12, 16, 16. That's going to be key. And what happened today? We went to 116.49. What's the rule of thumb? And this is exact. I mean, it's so perfect, right? What's the rule of thumb? The rule of thumb says that the bar that takes out the left side low, and yesterday's low was 116.68, so it took it out. Sorry, the last week's low. It says you've got 2 weeks, sometimes I'll say 3, but really it's 2 weeks to close above 116.80 by this Friday. And if it does that, it says it could bounce now that it's gone below it. It hasn't closed below it, it's gone below it. And it says you can bounce to the next gap or moving average, in this case, the 9-period 119.27, and then above that is 121.90 is the 200-period moving average. You could bounce and make an M-shaped pattern. What's really important is that the major long-term monthly rising inside Chapman wave, inside track support level is right there. The real up channel that goes the 31-year up channel really is down at the 106.50 area. So let's just give it a time. And all I'm saying is that we've made a leg B to the downside. We've even gone to a D at some point. We did that back in the end of 2013. So it's possible. We're calling this an A and a leg B to the downside. There's your little arch formation. No strength whatsoever. Keeps making lower lows. So this is going to be really important. The MACD is still the monthly chart of the TLT. The MACD is still very weak. The stochastic is improving no, it's not. It's declining. And so is the histogram, the vertical lines. So this is not such a good sign for yields. And now let's do that very special thing that we want to do before we go to the really good questions I've got today. I'm going to go to them in a moment. TNX.X. And what do we have? We have a peak D holding at high level consolidation. Hasn't broken out yet. That's going to be very important. And the weekly chart, 2621, is the level 2.621% that was made back in November, was it? No, December the 16th, the week of the 16th, 2621 in the TNX. And so far, 2615. We are 6 cents away from breaking out. And that would be leg B in the monthly chart. We're starting to get into this huge inside track repellent zone. That can take you all the way to the 29 level. 29.60 starts to break out. So we're expecting higher rates. It's the speed, really, that's going to be the issue. All right? Now, here we go. IYT. Who asked about the IYT? IYT, Sarah. Swift. So IYT is making lower lows, made a peak D in the weekly, peak D in the daily, leg B in the, is that really a 1650? No, leg C in the weekly. If your eye can't pick it out, you've got to look for the numbers. My eye picked out that there's possibly a 1 or 2 cent difference, and there was. So this is a leg C in the IYT, the iShares Transportation Average in the monthly. And look at the candle so far. Not a good-looking candle. MACD is good. Stochastics at 90%. Excellent technicals. But I think that this rectangle formation is going to see a test of the IYT of the low of January the 6th, the week of January 6th, at 161.58. Now, what's really important is the first level of support is 162.90, made on the 2nd of February. The resistance is in the 167.50 to 168.30 area on any bounce in the transports, and they are telling us, be careful. Okay, so that's it. And Swift was one of the stocks there. Have I done anything? Swift is just making lower lows and lower highs, made a peak G weekly. Can't even remember now what the daily is. The daily is, wow, peak E in the daily. And it's just gone down, down, down. Oh, I wanted to show this. What stock was it? Oh, man, I hope I remember. I'll get to it in a moment. There was a Chapman wave flat base restart. Remember I was talking about the unconventional flat base restart, which is a different format of the flat base restart, which doesn't break the left side low, and it keeps coming back, but it doesn't break it, and eventually it does. But the one that takes out that low after it looks like an instant restart can go much lower. So here we are. Let's look at it. So Swift is not good. I think I remember. Let me just see. Question here. OIH. I wonder if it's the OIH. OIH. OIH down 53 cents at 29.96. Peak E in the weekly chart. Only a peak C in the month. That's no. It looks like it could. No, it's not. So this is OIH is looking very poor. This is the Van Eck Vectors Oil Services ETF. Trying to find some kind of support here at 29.94. I think it might have to test between 29 and 28.50 to really get a sense, because there's a low way down. November the 2nd of 27.24. That's more than 2 points away. Oh, man, that's not so good. Okay, so I don't like it. And the XNG, that's natural gas index, is worse than the actual UNG. So it's gone down. Oh, Chapman wave flat base restart. There it is. So this is the Chapman Wave flat base restart, where you get an instant restart right there. The week of this, on the 17th of November, 601.55 goes to 619.63. That makes a peak D with an inside bar the next day. Breaks to a new high with the MACD and stochastic still good. So it spirals up and it goes to a peak A, and then has a very sharp pullback from 638.15. That left side low goes to 600.63. Remember the lower on the left side was 601.55? 601.55. So this is the unconventional flat base restart. Why? Unconventional. Why? Because it started off its instant restart. I'll talk about this when we get back. Basil Chapman, Tiger, we'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's down 33. S&P's down 8. You see the buying that keeps coming in? There's a certain point where I call it wheel spinning. In fact, this weather we're looking at, I should move the camera. You should be able to see the snow coming. It's actually coming. It's coming right across. It's coming not at a horizontal, but at a degree of, I'd say it's like a 12 degree. No, it must be much more. How would you get that? Actually, it's almost horizontal because of the wind. Okay, so we're looking at the XNG, which is the natural gas index, trading at 553, down 10. The low that was made at that leg D is 601.55. Then what happens is it goes higher and pulls back, but it does it in 3 bars, less than 3 bars. And that says that you can consider it a potential instant restart. My thinking usually when the MACD is like this, that I've got to continue the alphabet until G. But this went to a G, which was the C right there, and then it went on, and that became a D, because after G you can't get an H. So that was a D, A, B, C, D, F, G, H. Yeah, you can't get it, so that became the D. But what's really interesting about this pattern, especially the unconventional Chapman wave flat base, is that not only does it come down very sharply, it takes out the base. And in this case, 600.63. Look, it took a while, left side, right side, price, time match, took right up until there, until the 1st of February. And the whole thing took place back in middle of November. And then it did take it out, lower lows to lower highs. And that's the pattern that we've got to get used to. That's what I think we're looking at in a number of different sectors and indices. All right, so that's that. And then now the question is the SMHs. This is very important. Until the SMHs really tank and start to come down, we are short the SMHs, haven't been taken out from our buy stop. It's at 77.69, down 62 cents. And until the SMHs, the semiconductor market vectors ETF, really takes out the 9-period moving average, you know that it hasn't closed under the 9-period moving average since the week of November the 4th. Yep, and that was the first time since it broke to the upside. Holy moly! Since May of almost a year, since May of last year, when the SMHs were at 50.88, it has only closed under the 9 EMA once, the black line closed, that is. It's only tested it a few times, and I think it's time. I think it's time. The MACD is flat. It's holding well. Stochastic's still at 93%, but the relative strength is saying it's not quite there. And I'm just looking and saying, okay, I'm trying to anticipate it. It could be wrong. Even if I go to this leg right here, the technicals are not anywhere as strong as they were back there. And this is suggesting that there should be a faltering. And the question was about the SMHs together with the SOX index, which is the inverse on the short side, SOXS. This is direction shares, daily semiconductor ETF, 3 times short. And it's rallying nicely. It's up 2.7% at 8. But it's done that very nice business many times before, and it's failed and gone to low lows. I'm suspecting that this is the first opportunity that I can see that the SOX, SOXS, the direction share daily semiconductor ETF does not break the low of 777 in this move right now. I think it's going to go higher. That's my thinking. We'll see. It could do a little retesting of the 770s, but I'm not sure of the 791 to 783 area, but I don't think it'll break the 777 area. That's famous last words. Let's see what happens. And the other thing is the volatility index. Look at the VIX. Strong candle today, giving back a chunk of that, but it's still pretty good, and it's been holding with lower highs, but not making higher, with higher lows, but not making higher highs until the spike today, and it hasn't held it. But it hasn't gone above that peak C at 1296. So this is going to be a very interesting day, because I'm suspecting that we're going to see some give back of the losses so that it's ameliorated towards the close, and scare everyone on the short side yet again. Even into tomorrow, it's at 3 o'clock that we've got to see the Dow down 80 points or more, S&P down 11 or more, and holding with the VIX index in the 13s, because almost anything else is going to say, no. The Fed is, they're just messing with us, and they're going to keep this market buoyant as long as possible. So I hope that helps you, Mike. So just keep that in mind. If you're looking at trading the one of the inverted, don't forget this Friday, they start, is it this Friday? No, I think it's in about end of the month. They're going to split yet again. They're just pathetic vehicles unless you time them perfectly. If you do, they are fantastic, but they've got to be timed very well. So I hope that helps you. Those are the numbers to look at. If the VIX gets anywhere into the 1219, if it gets anywhere into the 1283 to 1179 area, this market will hold very well into the close. Just keep it simple. SLX, which is the steel ETF, it's bouncing here, but I think that it needs more work to do in this rectangle formation in the weekly chart. So SLX at 40.84, the Van Eck Vectors Steel Index, SLX at 40.84, down 23 cents. I'm watching it closely. I don't think it has more than an arch formation together with the market and then a pullback. So I'm anticipating, yes, it could go a little higher, but I would not be surprised if it gives quite a bit back and takes some time to, it's had a huge move going from 1530 to the 44s. It just needs time. I think it needs more time in the weekly chart. Okay. So I want to go EUR USD. Peak C, which kind of says at 1.063, if the euro dollar currency pair takes out on the downside 1.060 support, that's going to be very negative. If it bounces above 1.073, is it 1.0713, that's going to be very good. That'll go to a leg D if it's tomorrow. But that arch pattern in the monthly that went to a lowercase m, this is the move that usually starts a powerful move to the upside, taking out the left side low. MACD quite strong, stochastic improving, and it hasn't done it yet. So we've got to watch that very, very closely. I don't know if I did this. This is the E-mini. This is the March. Sorry, this is not. This one I moved up to the June contract. It's in a strong leg, A to the upside, had a very big pullback, made a wonderful bowl, inverted bowl arch formation. Left side, right side price time match, had a couple of peak Ds, and then it pulled back. Only D. What's the objective in the Chapman wave methodology? You remember? Let's just do this again. Let me find it if I can. I wonder if I've still got it. Can I see it over there? I might have taken it off by mistake. No, there it is. Okay, this is the objective in the Chapman wave. You identify the lowest, most obvious low bar, and then you merely count each successively higher peak. You want 4 higher peaks, uppercase to the bull side, and lowercase in the bear phase. And this is D. D is where other things can happen. Just keep it as simple as that. And what do? We got your D. Other things can happen. Kaplop, arch formation at test. D formation. What do we get? Arch formation. Plop. And what do we get? Arch formation at D, plop. And you haven't been able to get to D's yet. You've got a very strong leg A at this point. We'll talk about that in a moment. The parameters are at 23.62. A close under 23.58 in the next 30 minutes is bad. The close over 23.64 is good. I'll be right back. Dow's down 30.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Questions are, we're back. Dow's down 30, S&P's down 8. Had a good question from Paul. Paul said, actually a statement, not a question, statement. The banks have increased rates on all loans, but not on deposits. Is this not fraud? Could you address this on your show today? There's something that I'd mentioned a while back. I said, we must watch how quickly the banks raise rates because it took them a long time to keep lowering them. It was very much, I said, like the gas station. When oil goes up, the ladder, well, now it's all electronic, but it used to be the ladder was shoo, right up there. As the price went up within seconds, they bumped the price. And when the price came down, they would just leave it there for a while, quite a while, and then kind of bring it back just a little bit. So absolutely great point that you made. And, is it fraud? It's really a scam. But I don't think it goes under the context of fraud. I don't think there are regulations that say speed is important, and there should be. As quickly as it goes up, you should be able to move it as quickly to the downside. So the loans and the deposits are treated almost separately. And if you look at the XLF, the financials have had a spectacular move. I think that they aren't going to be under pressure. You can see it right there, peaking in the daily. A peak D potential pullback here in the weekly, still strong in the monthly. That I think is going to be the issue. How do the banks respond tomorrow afternoon when the Fed says they're going to raise rates again? And I think that you've got a really good point, but I don't know what we can do about it. I don't think it's fraud. I don't think there's any. Let's face it, Elizabeth Warren and our guy here, Markey, would have been jumping up and down quick enough if they thought that there was fraud there. And they haven't. So I suspect that it's just there's no legislation that says they've got to use speed to bring it down. But it's a great question, and it's the same as the in the auto sector, in the crude oil sector. So I've addressed it. You and I are not going to be able to do anything about it, but that's just the way it is. So the XLF is suggesting to me in Goldman Sachs here, look, they're all pulling back sharply. I can now put a down arrow. This Goldman Sachs is in a sell mode. Yeah, it could bounce from here, but up until right this moment, the designation in the Chapman wave is called sell mode. MACD's very weak stochastics weight 32%. It was at 93, 95% before back in late February. And you were at 255.15 on the 1st of March, and now you're at 246. That's quite a bit of a pullback, but nothing when you're looking at it in the context of what's going on. I think we're in for a pullback, and I think it's going to turn into perhaps more than a pullback. I think it's going to be pretty deep. That's the way I'm looking at it now, because the sanguine attitude is something's wrong with that. Larry, I think I mentioned this morning, what's wrong with this picture? I think what's wrong with this picture is that there's a reality and there's an anticipation. And the reality right now hasn't quite come even close to the reality of what's happening in the market, in the economy. Yes, things are looking up, things are looking better, but I think the market's got ahead of itself. And I'm not saying crash, I'm saying we could have a pullback which could increase in size, and it could take a little longer than one would expect. That's really what I'm saying. So, Paul, I hope that answered your question to a certain extent, but nothing I can do about it. Quickly, I want to do GE. I was asked about my Dow quartet. Look, GE, very weak. It had a pop-up on some news the other day and then failed. And now it's at 29.59, down 27 cents. Weekly chart is getting weaker and weaker, as is the monthly. This is a little bit of a heads up for me. IBM was a fabulous mover. Then it made a doji high back there on the 16th of February at 182.79. It's only 7 points lower, but look, making lower lows, lower highs, made the arch formation, and I've still got it at a peak C. And this is very interesting because there was a high in the weekly chart back in 2016, the week of December the 16th, of 169.95. And then the very next high to test it was 169.95.92. with an open round number 167 and pull back. So that's like an A and an artificial B. I could call it Chapman Wave Phantom B, and we could have gone to a D. I'm not going to do that. We have too many C's in the weekly charts, and that's just suggesting to me that there will be quite a sharp pullback, but not a major breakdown, just building strength for the next move to the upside. That's kind of what I'm looking at here, and we will get to a D. When you get to a D after that kind of a C, you can go to a D and then an E. So this actually turns out in the end to be quite bullish. Triple M is in leg E, making a potential peak E right here, with the MACD starting to turn down, still very strong, but starting to turn down. Stochastic at 94%, still strong. Leg C, all-time high yesterday. Leg C in the weekly, leg C in the monthly. This is what's suggesting to me that we do have a consolidation, and then we go on to new highs. And UTX, the fourth one in my Dow quartet, is making that H pattern with the peak E back on the first, the gap up on the first, going to 114.44, and now it's trading at 114.44. That was 3,117, and now we're trading at 112.06. Same pattern as the Dow. It looks exactly the same. Peak E in the weekly chart, leg C in the monthly. Monthly is not quite as strong as the others because it didn't go to all-time high above 124.45 made in February of 2015, 124.45, and now we're at 112. We've got 12 points to go, 12 and a half points to go to exceed there. That's a lot for UTX because it's also dollar related. Whoa, we've covered a lot. Now, XLI, put buyer of XLI on for April 21st expiration. Oh, and 63 strike, 5082 contracts at 0.49, up 14 cents. Yeah, I think that's the way I'd be looking at. I'd be looking at April, wouldn't be looking at March. I'd rather be looking at April and suggesting to you that if you want some puts, you could take a risk. You could even go out to May, but I'd not put it in for March, even though I think we're going to be pulling back quite sharply just because of the risk reward. But if you are risk averse, then I would suggest that you could be looking at puts, near-term puts, which is it this Friday? No, it's the following Friday. Am I right? Where's the calendar? I can't have it. Don't have it in front of me. When's expiration? Friday, monthly expiration? The third Friday? By 1, 2, 3, on the third Friday. So all I can say is that at this particular, it'll be this Friday. Yeah. So this Friday is the third Friday. So expiration, yeah, you could take a bit of a gamble if you want, but I'd rather be looking out at the Aprils. Okay. Let's see, Basil, on market participants intolerant of any loss over 1 or 2%, thus we could get an acceleration going down. Isn't this tonic for a crash? We're not saying we will adjust that. All the ingredients are there. Momentum to upside equals momentum to downside. Peaky, I'm going to suggest two things. One is that there are still far too many people that are out the market, and that's going to be key support because they won't want to get in with if this market pulls back 7.5%, 7 to 8.5%. Although they say we want to buy a dip, I don't think they're going to buy that dip. So that allows, yes, maybe we can go down a little bit further. But in the meantime, what's going on is that there are a lot of stocks that are really good-looking stocks that have exceeded what they should have exceeded. So if they can come back to what I call a normalized price, or even a normalized overbought price, I want to be looking at that. So let's talk about that when I get back. Dow's down 325, S&P's down 7.5. Basil Chapman, if I get the questions out, we'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
And I completely forgot to show it. I had already done this to show the low. I put an up arrow, so it was peak A, and then it went B, C, D. And it suggests that this D, right at the 200-period moving average. Remember, you don't have to use a moving average until it gets close. And this is the green line is the 200-period moving average, and the 2-minute E, this is the June contract. So we've already achieved, what did I say? We always like to go for Ds. We're at D. But the magnet of the 200-period moving average is there. The stochastic is only 77%. It's not that good. And the MACD is turning down. So this is going to be a very important phase. Why? Because you can see there's constant buying because people just don't want to be wrong. How many times have you're trying to short or you bought the one of the inverted VIX indexes or the long VIX index, and it just keeps going to lower lows and lower highs. So this is a very important moment. Why? Because if the Dow is able to close, as I said to subscribers to my opening call this morning, in a narrow close with a downward bias, And then the Fed comes on at 2 o'clock tomorrow, and you could whip around. But as the Fed comes on, whether you're up 6 points or 8 points or down 6 or 8, it just narrows to almost unchanged. And then they make their statement, and whoosh, things happen. So we're watching this real closely. Now, here's something else that I think is very important. We own the XLV. We have a position in it. And that XLV is trading. This is the XLV is the S&P Select Healthcare Spider Fund, and it's holding very well at 75.82. It's in a G/C. It could go a little higher, but the MACD is turning down. Stochastic's still good at 90%. The weekly chart is what's impressed me, and I'm saying to myself, wow, we had the defense president where defense stocks, which should have tanked, went up 3 times, 4 times in some cases. Maybe with the healthcare, we've got the anti-costs and anti-this, and we've got healthcare coming up. Maybe we're looking at something that says, you know what, healthcare could actually do pretty well under this president. I don't know. I'm just saying. This chart is great. 76 round number high back in August of 2016. And the week of the 5th of August of 2016. And we haven't 76.09. We've taken it out by 9 cents for a leg C in the weekly chart, and we're just breaking resistance. So it's fascinating to me. I keep thinking it's going to pull back, but we don't have enough to take off and keep a core. So we've just got our core position, and it's very interesting. So I'm looking at different areas, and I'm saying, wow, within these different areas, are we looking at, for instance, let's look at the GDX. Is the GDX it's down 2 cents? Is it going to have a chance to do some more than just bounce and retest the lows when the Fed comes out tomorrow? What if the Fed puts pressure, for whatever reason, pressure on the dollar? Although when the Fed lessens the rate pressure, gold seems to have achieved higher highs. So I'm just looking at this. I'm saying, just tell me. Dollar pushes into the 102s. Very good action. It goes underneath 100.90, goes to the 99s in the next week or two. Lousy action. We've got our parameters set. In fact, you can make it even narrower. If tomorrow the dollar is up at 101.85 or higher after the Fed speak, or it's below this low here of 101.01, those are the parameters to look for, because that's going to affect probably gold and other things. If you're looking at the TLT, the TBT, have I got time? Yes, the TBT is in leg C. Maybe making a peak C today. There could be one more pop-up for a leg D. That could happen prior to the Fed. And all of a sudden, you've got your D in the TBT. This is the ultra-short Lehman 20-year Treasury bond ETF. And then it starts to pull back. And finally, the TLT starts to rally because the market is pulling back and money goes back into the social safety of bonds. We'll talk about that tomorrow. Have a great day. Check out my opening call. I hope you would find it very beneficial and profitable. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.